Welcome back to the Purposeful Wealth podcast. Today's conversation is a special one because I'm joined by someone who has quite literally helped shape the financial planning profession in the UK. Jackie Lockie, or Jackie, has spent decades at the heart of the industry, not just working with clients, but raising standards, influencing education, and really helping define what good financial planning really looks like. In today's episode, we're not just talking about money, we're talking about how financial planning has evolved, what truly great advice looks like, the behaviours that shape long-term outcomes, and what a lifetime of working with clients and financial planners teaches us about wealth, decisions, and the life itself. And as Jackie now steps into retirement herself, we'll also be reflecting on what a good retirement really means and the wisdom that she's gathered along the way. So whether you're someone thinking about your financial future or choosing a financial planner or simply curious about maybe the human side of money, this conversation, I hope, will have something for you. Jackie, it's an absolute pleasure to have you with us and a big welcome to you.
Thanks very much, Jonathan. It's great to be here.
Yeah, great. Well, you're looking really well, and you're certainly looking like you're on that transition of retirement.
Yes, absolutely. I'm trying, definitely trying.
Good, Jackie. You've spent decades shaping financial planning, in the UK. What has changed most for clients over that time?
So I think there were a couple of things that have changed from a client perspective over those times. And I think the first biggest change was the introduction of RDR back in 2004. And that essentially helped clients really understand and focus on how much they were being charged. So essentially what the Retail Distribution Review was doing, it's a piece of financial services legislation that forced all financial advisors and financial planners to separate out the cost of the advice from the product itself. So if you paid a fee, then you would see that fee. And if they were charging commission, then you would also see how much commission was being charged. But essentially, there became a kind of quasi ban on commission because you had to pull those two elements apart so that the clients could really understand the value of the advice that they were getting. And then if they were advised to have a particular product, for example, the cost of that product was separated from the cost of the advice.
Yeah, it was a big change. For any of our viewers or listeners, RDR was the Retail Distribution Review, essentially that big review of the distribution of financial products and investments. You're absolutely right, and I remember that. I remember that period greatly, and I think it was absolutely a welcome change to certainly if the financial services was to move from being industry into developing financial planning as a profession. It definitely needed to happen.
Yeah. And I think also it helped clients really understand what they were paying for. Because, back in those days, early 2000s, I would talk to a lot of clients and they would say to me, well, I can't afford advice. And, some people listening or watching today might be thinking the same thing. I can't afford it. How am I going to pay? Times are tough. I have other important things that I want to pay for and plan for. How can I afford advice? But the reality was that they were already paying, actually through the nose in many cases, through commission in those products, which was actually penalising the growth in a lot of those products. And so they were still paying, but they thought they were getting advice for free. And so I think in kind of pulling those two pieces apart, it's driven down the cost of advice and also the cost of products by actually highlighting those two differences. And so I think, one of the things I think learning for me over the years is that we all have to take responsibility. We can't get something for nothing. And one way or another, we're paying for it. And if we want good quality advice, we need to be prepared to pay for it. And in the old days, pre 2004, we were still paying for it, actually a hidden amount. And now that all that transparency has come to bear, so you know exactly how much you're paying for the advice and how much for the product. So then you, as the consumer who was seeking that advice, you can make that decision, exactly whether you're prepared to pay that or not.
Yeah, yeah. Just that it probably answers my next question. I was going to ask you what you think clients benefit from that simply didn't exist 20 or 30 years ago. And it probably is that. It's that transparency, isn't it?
Yes.
It
Yeah.
knowing what they're paying for. Is there
Yes.
anything else? There's anything else that you think clients benefit from, today that didn't exist 20 or
Yeah.
30 years ago?
So there are two other things actually. A huge amount. When I look back over the last 30 years, a huge amount has changed, for the better. And one of those two other things is cash flow planning. Back in the early 2000s, there was barely a cash flow tool in sight. There was no real competition in the market. There was essentially one tool out there at that point in time. Other tools came from around the world, one from Australia, one from the States. And again, it focused on, usability in front of a client so the client could see if they were going to be okay. Because, I think for me, that is the question, as I'm sure we'll get on to, when you're looking and getting towards retirement. The question that I was most asked was, am I going to be okay? Do I have enough money? Do I need to do anything drastic with my finances before I stop work completely? Those kinds of things can be easily and actually visually demonstrated in a very simple fashion by using cash flow tools. And so I think that's probably the other, the second major driver after RDR. And I think the other thing that is changing the market and actually is having a big impact at the moment more recently is the behavioral finance aspects. Because back in the day when I was an advisor and a paraplanner, I would say to my clients, as far as your attitude to risk goes, I have to ask you this because the regulator requires it. But, where are you on a scale of 1 to 10, 1 being shoving it all under the mattress and 10 being it betting on the 230 at Doncaster at the races? Where on that frame do you feel? And everybody would kind of go, 5. Everybody was kind of in the middle. And to understand actually more qualitative questions that we could be asking to really understand the drivers behind why our clients do what they do, what gets them out of bed in the morning, and actually where their concerns are about money, how much they're prepared essentially to risk in the markets for investment purposes, but actually understanding what their objectives are also drives a big picture of how much they actually need to essentially put into the investment markets, or in some cases they might not need to. They could just keep everything in the bank account.
Sure.
So all of those conversations, I think those three elements have had a huge impact on the quality of advice over the last 30 years.
Yeah, yeah, it's certainly. When I think about, certainly when I came into financial services all those years back, it was 1988 with the bank, and then I moved into work for an insurance company where you were essentially just selling products, and there was no real, you weren't really recommending or selling a product in the context of a client's desired lifestyle, but yet here we are now. Clients can, if they're working with a financial planner, with forecasting, they're able to visualize what their financial future could look like. They're able to see what's possible that they wouldn't have been able to see before. And I don't think we talk enough about what it means to have, to remove that anxiety or to create financial peace of mind. And I think that's what's just so powerful, isn't it,
Yes.
about about the financial planning journey? And I mean, what price do you put on knowing that you can secure all that's important to you and your family? I mean, I mean, how do you put a price on that? It's quite incredible.
Yeah,
But
I mean,
what?
you can't put a price on it, can you?
No, no, absolutely. I mean, Jackie, what originally drew you into financial planning, and what's kept you in the financial planning sector for a lifetime? I mean, for a long,
Yeah.
long time.
Yeah. So what drew me in was maths. I'm quite good at maths. I am a closet astrophysicist at heart, but I decided to do a big swerve and not go to university to do a degree in astrophysics. I decided to get a job, and I worked in the kind of, well, they used to describe us as not the actuarial department, but kind of the slightly more human side of the actuarial department, doing kind of manual calculations that in those days, in the 80s, the computers couldn't do themselves.
Sure.
The kind of legacy old products that many people had, lurking in your desk drawer somewhere. And but so that was quite interesting because I'm a bit of a geek from that point of view. But what started the process of getting into the profession itself was I started to talk to financial advisors on the telephone at this insurance company. And they would say to me, "Oh, Jackie, this is what I'm trying to achieve for my client, but I don't know how to do it." And I would then be problem solving to say, well, this is the kind of product, a couple of products that the client's got. But maybe there are two scenarios here, two potential strategies. We could do it this way, or we could do it this way. These are the pros and cons of that. And then I left it up to the financial advisor to talk to their client about it. And that often they didn't understand the products particularly deeply, and therefore they didn't understand those little nuances that could actually make a real difference to a client's lives. And so I kind of became the kind of technical expert quite quickly. And then I thought, okay, well, maybe I could have more of an impact by actually working at a financial advice firm. And so I went off to Taunton to work for a very small IFA firm as the paraplanner.
Right.
And then that really, I was working in the background, kind of doing the number crunching, running some spreadsheets, and the very early iterations of the cash flow tools as they were being developed and coming out. I was kind of racing along to the demonstrations, really to understand what was going on under the bonnet of those tools. And with the sole purpose of helping those clients get better advice than they did the day before. And that's essentially the one reason why I've done what I've done. If I can help one client or potential client to steer them to get better quality advice than they otherwise had up to that point, then that was kind of, my job was done. I could keel over and die as a happy person. And so that kind of thirst for the technical knowledge, but also doing right by clients and making that difference. I then realized that I could stay as an advisor, as a paraplanner with one firm. I worked with the sixth largest accountancy firm at the time. Or I could probably affect change in, maybe 100 clients maximum. If I went to work for a professional body, I could challenge a wider group of financial advisors and planners, as many became, to challenge them, intellectually and also personally, to help them give better quality advice than they had otherwise done. So it meant from being able to affect change for perhaps 100 people in the UK, it then became, literally maybe hundreds of thousands of clients potentially across the UK and beyond. And so that kind of pebble in the pond where you send out those ripples, that's essentially why I've stuck with it, because I've seen so many great stories and experiences of financial planners who've sought help, who've been open to learn, and to have that drive, to share that drive that I have to help clients get the very best quality advice that they can possibly get. And so collectively, I've kind of, helped support them to grow the profession.
Yeah. Well, it's truly fabulous. even just to hear your passion come through in what is, it's a great profession. It truly is. And of course, money plays such a big part in our lives. I mean, there's probably a financial consequence for the majority, if not all, of life's decisions. And so, it's great. It's great to know that that the profession has people like your good self. And I mean, from your perspective, just thinking more on the financial planning side of things, about what it is to be a good financial planner, what, from your perspective, what separates a good financial planner from a truly great one?
So, do you know, that's a great question, Jonathan, because I find that there are an awful lot of people out there who are calling themselves a financial planner who actually aren't.
Mm.
And it drives me absolutely around the bend, as you can imagine, after all these years. And a lot of people, after there was pensions mis-selling scandal, there were issues with the banks like Northern Rock, for those of you who are old enough to remember, like me. And at that point, to be an independent financial advisor, which is a regulated term by the Financial Conduct Authority, Financial Services Authority as it was back then, nobody wanted to be an IFA anymore. They didn't want that same to be tarred with that same brush. So a lot of people changed their trading style, if you like, from independent financial advisor to financial planner. And but the vast majority are still, in my opinion, selling products first. So they might talk to a client about what their objectives are, but they're talking to the client with, in the back of their mind, this kind of slot machine of, well, what product do they need? What product do they need? They're not talking to a client like a real financial planner is about their wants and desires. Why do they want to do this? What has happened in the past? How do clients understand? How did they grow up with money? What were their experiences when they were growing up? How did their parents talk about money? Grandparents. I mean, I often tell this story about my grandmother and my mother and me. We all share similar traits. And back at the end of the Second World War, my grandmother was a nurse, and she helped a lot of families who couldn't afford NHS care, or there was no NHS in those days, but any kind of healthcare. And so they repaid her, because it was up in Liverpool, they repaid her with bars of Palmolive soap and with Colgate toothpaste, because of two massive factories up in that neck of the woods. So what happened was that when we talk about money, it's not necessarily, just, money, coins and notes. It's that experience. And what happened with my mum was she was growing up in that environment. And when she became an adult, she unwittingly started hoarding bars of Palmolive soap and Colgate toothpaste. And then you come along to the next generation down, which is me. And I witnessed my mum doing that, and so I updated this hoarding, and I used to hoard shower gel and toothpaste, and then it was probably about 10 years or so ago that I suddenly realized that that's a kind of behavioral trait that I've learned essentially from my mum and my grandmother. My mum's learnt from her mother. And it's all, but these issues about how we're influenced as a family unit, how we grow up, have a massive impact on how we see things moving forward and what our personal opinions and views are on different things. And all of those experiences go into the mix to relate to financial planning about what we want as a client, what we want to happen with our money in the future, how we want it to work for us. And the good financial planners out there will ask you all those sorts of questions. Why have you done what you've done? What gets you out of bed in the morning? How do you feel about things? They're not just kind of going, oh, well, let's look at what have you got? Okay, well, you've got a pension. That's quite chunky. Or you haven't really got an ISA. We should chop up your ISA. That actually is kind of a hidden. That's whatever product you should have is a natural side effect, a natural consequence of having the conversation about what you want as the client.
Yeah. It's very much wearing as our friend Paul Armstrong would say, it's the wearing the life planning hat first and putting the client's life at the very center of the conversations with them.
Yes.
And really, you've got no. You're not entitled to put on the financial planning hat. You're certainly not entitled to put on the advice hat or the IFA hat until you've undertaken that life planning and financial planning stages.
Yes.
Yeah, absolutely. And I actually think, if I'm not mistaken, maybe I'm mistaken here, but I'm sure that I'm sure, is it not Australia or maybe it's the US, that you cannot call yourself a financial planner unless you're demonstrating that you do financial planning. But maybe
yes, in Australia, yes,
it is maybe
the
Australia.
laws changed. Yeah.
And what do you feel? I mean, what do you feel clients most often misunderstand about financial planning?
I think a lot of clients, in my experience, a lot of clients come with a specific problem to solve. So, like at this time of the year, if you're looking towards the end of the tax year, for example, they're like, oh, well, maybe I should be putting more money in my pension, or should I be using that money to pay off a bit down on my mortgage, for example, or maybe I should be saving it, depending on because the economic climate is quite unknown at the moment. And so a lot of people will come, they have one specific problem, but they don't necessarily understand about how that one problem feeds into the huge picture. And those decisions that they're making about that one issue right now will have a natural ramification on other objectives that they want to achieve in the future. And so I think seeking good financial planning advice, even for perhaps what we might perceive as clients as a small decision to make. Should I top up my pension or not? You don't know what you don't know as a client, and a financial planner can kind of go, okay, we can run different scenarios, but let's talk more about what you want in the future. And being able to have those conversations. A financial planning friend said to me years ago that financial planning is a bit like taking a client in your little time capsule. You get them in your time capsule. You zoom on to a particular date in time, like the day they want to retire. You open the time capsule and you ask them to have a look around. Do they like what they see? If the answer is yes, you go, great, nothing to do then. If the answer is, well, I'm not quite sure about some stuff, then you kind of go, right, okay, you make a list of those things, you take them back in the time capsule back to today, and you discuss what you can do. Because when you make any financial decision, it's a trade-off against another decision naturally. And so don't think that when you're making one decision, that it's that decision in isolation. So you might be, by saying, okay, I'm not going to top up my pension contribution this year, I'm going to pay down that little bit off my mortgage instead, then that could down the line have an impact on your estate planning, for example. And so every decision we need to understand has an impact, and let's get the right decision that's right for you, not for anybody else, not for anybody else's circumstances, but for you as the client.
Yeah, very, very good indeed. I mean, I think you're right. I mean, if a client comes to us, it will be generally around the products. They're trying to make sense of the various pensions they have, or they've come into money. Should we invest this, or should we pay off our mortgage? And I think that tends to be how we frame things. Is look, we can absolutely help you with that, but before we get there, can you tell us what's important about money to you?
Mm.
And trying to dig a bit deeper and to build a bigger picture about what and who is important to to our clients.
Yes.
I mean, if someone listening or watching this episode is in that stage in their life when they're looking to choose a financial planner, Jackie, what questions should they be asking?
I would ask about how they charge, about the various services and levels of service that you could obtain potentially. For example, some people will charge you for managing your assets, and so they will put them on a platform and manage them for you. Other people will charge a one-off fee for a financial plan, for example. Other people, if they're managing your assets, they won't charge you for the financial plan. one of the things that I have come across in my search for a financial planner, my husband and I are looking for a certified financial planner who is 35 or under. So we can have that longevity with our relationship with them. And what I've realized is that when you talk to any advice firm, they'll show you a list of costs and charges. It's immensely difficult to compare one against the other, immensely. So, for example, one firm said, okay, well, we don't charge for the financial plan, but we charge a percentage of annual assets under management. But we also charge a one-off fee for every additional amount of money that comes in. So every new tranche of money. The other firm said, we charge a fee, which I think was about £1,000 for the financial plan, but we have a much reduced fee for the annual management charge for managing the assets. And there is no additional fee for any other tranches of money that come in. So then you end up with this, your head's exploding because you're like, well, they're both good financial planning firms. We like both of them, but how do you pick between them? And so you've got to think about, take away their information and maybe run some scenarios that are suitable for you. Ask the financial planning firm about the costs and say, okay, well, in my situation, actually, what would it cost me? And not just for the first year, but maybe for the first 2 or 3 years. So you can kind of get a feel for the overall cost for a number of years. Because if you're going to engage a financial planner and engage in that relationship, you don't want it just to be for 1 year. You want it to be, multiple year relationship, hopefully. And so it's one thing asking about the costs. Lots of people say, oh, well, ask about the costs. But then being able to compare those two costs and it is important. And I think also you have to feel comfortable with that financial planner. Look for the right qualifications. So they might be chartered with the Chartered Insurance Institute. But I would also recommend looking for a certified financial planner who are certified with the CISI as well. Because they have a much better training, a level of training that they've undergone, and a much more in-depth understanding of different scenarios that and those kind of ramifications that I've talked about already. They're trained to kind of search out those potential ramifications. So it means that they can ask you about the issues and potential trade-offs, and you can help make that decision. So your relationship should feel like a collaborative relationship. It shouldn't feel like you're either giving them instruction or the financial planning firm is going, right, you need to have this product this month or this product this month. It's got to be a collaborative relationship. And I think you also need to feel if you can be open, fully open about your experiences, talking about money, like I mentioned before, how your parents or grandparents talked about money and dealt with money in the past. You do need to be in the right frame of mind, personally, I think, to get into those kinds of conversations, because we had those kinds of conversations over the last month or so, and it's exhausting. And I think from a financial planner doesn't always realize just how exhausting it is for a client or a potential client to talk about, those very important things for them.
Yeah, and it must just be. I mean, there's yourself and your husband, whom I know very well too, and hugely respect. Have been at the forefront and involved in this financial planning profession for a number of years, and there's you finding it challenging, trying to find the right. So you can only imagine what that must be like for someone alien to this whole sector. Understanding how much information are they going to have to divulge, and how long is the process. And I often think one of the big things that clients or someone needs to consider before they engage with a financial planner is very much, does that firm deal with other clients in similar situations?
Hmm.
You know, our other
Yeah.
clients who maybe approach retirement or maybe in retirement, or a firm that is used to working with clients that come into windfalls, or, you know, if you're an entrepreneur dealing with a financial planning firm that deals with other entrepreneurs.
Mm.
Um, and I know that it's difficult to sometimes square all of these things off, but
Yes.
um,
And I
and
think one other important aspect is the size of the firm.
yes,
You know, what happens if, Jonathan, God forbid, you got run over by a bus on your way home tonight? You know, who picks up the advice? Who is responsible? How do the wheels set in motion to make sure that as a client, I would still receive the same quality advice from another individual in the firm? And so, are there protections, perhaps a locum in place? You know,
yeah,
are there any scenarios where that's had to happen? Those kinds of things are really important because it can give you, as a client, that peace of mind that it's like, okay, well, as you mentioned earlier, you're not just dealing with me, you're dealing with, my whole team, and there are specific people that have specific roles, but you can phone any of us anytime, and here are all of our numbers and contact details. And, some people will call, some clients will call, some clients will be like, no, if I will call if I need to. Other clients will just call because they need that extra reassurance. And sometimes you don't always know until the process starts, because it is, as I mentioned, feels like quite an exposing process to kind of lay your life bare in front of a financial planner. And so different people will
yeah,
react differently to that process as they go through it. So different people will need that extra little bit of support, and, as and when things crop up and you kind of think, actually, I'm not sure about that, or I don't know what you mean. But as a prospective client, it's important for you to be able to feel comfortable to ask those questions. And if you don't get a straight answer, then go elsewhere.
yeah.
There's none of this, oh, well, I'll get back to you. Oh, well, of course, we're super professional. Oh, well, there's always somebody, or
I know.
always here, or whatever.
Yeah,
You want to know the specifics so that you can have comfort in building that trust and relationship with somebody.
yeah, absolutely. And to answer your question, and those for those people watching and listening, the Purpose of Wealth podcast is brought to you by a company called Wells Gibson. And if I do happen to be run over by a bus, our clients will be well looked after by Josh Smith and Emma Jane, and supported by a very capable team. So that answers that question.
Yes.
So, although I think I think we do have a locum as well. We do have a locum as well. So, but no, you're absolutely right. And I mean, over your career, Jackie, what behaviours have you seen in clients who tend to achieve the better long term outcomes?
So the behaviors I see are that they engage. They're not nitpicking. They're not wanting to know every little minute detail about what's going on. They're not trying to second guess or, discuss the ins and outs of any particular decision that's been given by a financial planner, but they are fully engaged in the process. What is it that the financial planner needs from me as a client to get the best for my money, to get the best so that I can achieve what I want to achieve with my money? And it's really that engagement piece rather than, I think if you, with an accountant, for example, you kind of send them your stuff at the end of the year if you're self-employed or you run your own business, and that's pretty much it. You might have the odd question during the rest of the year, but it's pretty much a transactional relationship. So whilst you have a relationship with them, it's not until there's a problem that you would normally call them up and say, maybe as a business, you want to move premises, you want to rent or buy other premises, what's the most tax efficient way of doing it, and things like that. So you might speak to your accountant about things like that. But with a financial planner, it is a more frequent and kind of fluid, ongoing conversation that you're having. And so those clients who understand those differences don't treat them just like a transactional accountant, for example, but you're kind of more like your professional friend. So
Yeah.
before making those decisions, I'm going to call my professional friend. I'm going to ask them, is it in my plan? If I've discussed my hopes and dreams, there will be, little offside projects that pop up probably. And I will always go to my financial planner first, and then they will refer me out. So they might refer me to a more specialist accountant, if I wanted to buy a property or something like that, or to a specialist lawyer for specific things if I didn't have one already. But back to that, we don't know what we don't know as clients. I still don't know what I don't know after all my years. And so building that relationship with the financial planner is that fluid, ongoing, your kind of best professional friend. And those people who do that, they understand the process, because there is a lot to take on board in the process. There's a lot to understand, maybe about the different products that they've accumulated over the years, how different products will help in different scenarios. There's a lot to digest
Yep.
when you're talking to a financial planner, talking about, your hopes and dreams, not just for you, but, for your immediate family potentially as well. And so you need somebody that you don't just kind of do a brain dump and then go away and forget about it. You want that ongoing relationship. So as things can be tweaked, as your situation changes, there are minor tweaks to happen along the way, rather than, it's like when you go to the GP, you go with a big list of things that you want to talk to them about. You're not holding a big list for a financial planner. You're having that fluid conversation as things arise.
Yeah, I think you're absolutely right about engagement, and I would probably add openness to that.
Mm.
We certainly work a lot better with those clients, and maybe the openness just comes from trust and really understanding why we are following a particular process and wanting to know so much
Yes.
information, and heeding the advice as well. I think is clear.
And sometimes people want to heed the advice, but don't always do it. And there are other
Yeah,
reasons why they might not do
that's
it.
right.
There might be a family emergency, or there might be some sort of blocker that they're not actually comfortable. And they might not be comfortable, maybe because they don't understand fully. And
Yeah,
then maybe that's on the financial planner to kind of go, okay, well, rather than going, what's going on? Why haven't you done it? We're kind of backtracking and kind of going, is everything okay? Would you like another conversation about this? Would you like to bring anybody else into that conversation? What to establish what are the reasons why the client isn't perhaps going ahead or seems quite hesitant, or as a lot of clients do, they say, yes, I'll do something, and then it doesn't arrive. They say they'll send you something and it doesn't actually arrive. As a client, you need to have that commitment. And again, like you say, that openness to be able to say, actually, my life's, gone off the rails this last month. For whatever personal reason, and therefore, can you just give me 30 days and we'll get back on track, and that's okay. But having that two-way conversation, rather than viewing it as, well, they haven't sorted out my pension yet. Why haven't they sorted out my pension? I thought I was going to increase my pension contribution before the end of the tax year, and Jonathan still hasn't done it yet. So what's he playing at? You've got to have that open conversation,
true.
so that fluid conversation, and then that's where that relationship really builds.
Yeah, and just even aligned with that, I suppose the next obvious question would be, what are the most common mistakes that you think people repeat with money?
Yes, good question. Common
Maybe
mistakes.
spending too much, spending more than they've said they would in their financial plan.
Yes, yes. I think that's the big thing, spending more than they said they would. And actually, most of us don't really keep a track of our spending habits, if we're honest. Um, and but I think you should actually, and it's a great tip for anybody who is perhaps a prospective client of a financial planning firm, to do yourself a budget, to look at how much you really are spending on certain things. I saw an advertisement on the telly the other day, last week, that said, I'll give you £100 if you can tell me exactly how many app subscriptions you have on your phone. And most people went, oh, okay, £100, I'll take it. And they went, three. and most people have about 12. And so, of course, they never got their £100. But it's interesting, as in our heads, we think that we know what our finances are. But actually, the reality is that things change, we forget, we go on to other things. We never really have a clear picture of what our financial expenditure is in any given year. And particularly, where have been the emergencies? Has the car blown up like mine did? My car blew up 2 weeks ago. Completely out of the blue. It's been absolutely brilliant. And all of a sudden, basically, the engine just blew up. And that's it. I bought my own car. So then I was like, well, how would you find £25,000 for a new car in a week? How do we pick a car? All of those kinds of things. You're all like, what? All of a sudden. So how much, where would you get the money from in a situation like that? If you're not working with a financial planner and something like that has happened to you, then where would you get the money from? So, you can have those, do a little bit of work on yourself. Don't be afraid to. You're not asking for, absolutely everything about everything, but look at your finances. And actually, I guess my top tip, if you're looking to save a little bit of money, is look at how many subscription apps that you have on your phone and see whether you have 12, and maybe cut them down to the 3 that you think you have.
Yeah, I certainly think, we will ask clients to provide a summary of where they're spending their money, and also to think about what they anticipate, how much they want to spend maybe in retirement, holidays and so forth. But it's incredible how many, it's not really until you come alongside a client that it's only at that point where you have to urge them to start thinking about, perhaps upgrades to their home, or just ongoing home maintenance, or when do they anticipate changing their car next, and at what cost, and are they the type of people that would prefer a brand new car, either on a lease basis or a PCP basis, and then of course there's all the financial suitability around that, and then there's even the things like clothing and grooming that people don't think about, birthdays and Christmases, and there are just so many different things, and it's quite hard. I mean, even we were meeting with clients today who have 3 grown-up children. They've just sold their dental practice, and they've come into some money, and they're looking to invest it. But it's hard for them to even think about the cost of their retirement lifestyle at the moment, because they're not. They can't be sure about whether they're going to have grandchildren. Mm-hmm. They might have grandchildren. It really does require ongoing planning, doesn't it? And a process where you're meeting with your clients, coming alongside them every single year to review these things and really explore these things in depth.
And one of the other aspects that is really interesting, I saw some research last year, was that there's been a huge increase in the people being diagnosed with ADHD in the UK. Mm-hmm. And one of the traits, according to the research, is that when you're looking specifically at financial planning, that some people with ADHD will find it difficult to look too far into the future and to picture themselves in 10 years' time or 20 years' time. And so as a financial planners, we have to think, okay, well, maybe there is an impact there where we're basically taking it a year at a time with somebody. And whilst we have the whole cash flow for, the next 30 years or so, maybe that for some people, they need to kind of ease their way into it to understand, well, what's the impact next year? What's the impact the year after? And that as we get more comfortable with the financial planning process, that we might actually start then to kind of go, well, actually, okay, I'm worried about my retirement, but like you say, what if I do have grandkids, then maybe I want to give them some money when they're 18 or when they're 21, or, to buy their first, get the mortgage, deposit for a mortgage, or their first car. And So there are lots of other, and this is where the kind of behavioral finance aspect of the last, major changes over the last 30 years is really coming to the fore, to understand that it's not necessarily because if me as a client would kind of go, yeah, I get it. And then something happens that I don't do it. It isn't necessarily because I don't understand. It could be for some of those other factors as well. It's quite fascinating research.
It is absolutely, and it does seem to be the case that ADHD is becoming all the more prevalent in society, as well as other behavioural traits as well, and probably aligned with all of that. Because you're right, it's not just about what mistakes people maybe repeat with their money. It's that's the symptom. What's the cause of that? And that leads to other things like emotional patterns around money, which show up again and again. The Iran war's happening, and people seem to be there. A lot of clients can be. Is this time different?
Yes.
Is this time different? Should we be rethinking our investment strategy? Or people are naturally fearful, I suppose.
Yes. Yes.
And that's probably why financial planning is critical, because it's only financial planning that can really come alongside a client and say, yeah, you're right, your portfolio is down in value, but it's still higher than it was this time last year.
Yes.
And this time last year, we were able to show you at that value you weren't going to run out of money. And in fact, your portfolio could fall another 40% in value, or you could lose 40% of the value, and you'll still live the life that's important to you.
Yes.
So I think it's all of that. Can I just move? I want to just have a wee think about just professional standards, Jackie, and I suppose to ask you why. I'm so the background to this. I'm quite dismayed. I love to think that financial planning is a profession. I still wonder if it's an emerging profession. And maybe I've been saying that for 20 years, but
Yes.
And perhaps there's a lot of factors that come into this, but I'm quite dismayed, really, that. Okay, so my perspective is that to be an authorised financial planner, I believe you should be level 6 qualified as a minimum. It doesn't really matter in what environment you're in, whether you're in a restricted environment that you represent a few products. I think the art of financial planning, before you get to product stage in whatever context, there should be a financial planning process. And so that I'm quite dismayed that the regulator have settled on a level 4 diploma as being relevant. I mean, my question to you is why do professional standards and qualifications matter for everyday clients?
Wow. Yes. Very good question. So if I think back to 1994, when I first became authorised, a long time ago now, it wasn't a level 4 that was the minimum standard. It was actually level 3, and then that was optional. I can remember going to a very small professional body at that time, and I was sat next to shipping container lease salesmen, all calling themselves financial advisors, all sorts of walks of life, slightly different professions to deal with money. Basically, anybody could call themselves a financial advisor and sell you anything along the way.
Sure.
And then the regulator stepped in and started making sure that you had to achieve a minimum standard. And so this is what you were talking about, the level 4. So it's gone up a little step. So level 4 is essentially GCSE, O levels in old money, level qualification. That's what we're talking about here. That's level 4. So the regulator, and I've spoken to them at length over many decades about this, and they always say the same thing to me, and that is, we're dealing with the lowest common denominator, Jackie. So we would love everybody to be level 6. But if we made it a requirement to be a regulated advisor and a financial planner to be level 6, we would probably lose 80% of the profession. And if we lost 80% of those people, then, my friends across in Europe who have run other professional bodies across Europe, they always make fun of me when I see them, because the UK has the biggest advice gap. And if the FCA steps in and makes all the level qualifications from level 4, scraps that, and makes a minimum as level 6, we would lose too many financial advisors and planners, and therefore we would severely restrict the market that is available for normal people like you and I to receive financial advice. So there's this dilemma of, actually, we want people, and the regulator wants people. Part of its requirement and the government's requirements of the regulator are that there has to be a healthy market available. There has to be a market that is sufficiently buoyant that people can seek advice, bearing in mind that we already have the biggest advice gap when you compare us to most of the rest of the world, but definitely across Europe. And so I think that's why the regulator essentially hasn't gone full bore on level 6. It encourages it. What we do see is that when I look, and you can also look on, as prospective clients, you can look on the Financial Services Regulator's website for complaints. Those complaints that go to court, time and time again, they are level 4 qualified advisors. Very rarely, I've never seen a certified financial planner taken to court. I have seen some CII chartered financial planners taken to court. But the vast majority, over 90%, are all level 4 qualified advisors. And that then brings out, well, why are they like that? And it's because, it's O-level GCSE qualification level. They don't have perhaps enough experience. They definitely don't have enough technical knowledge. So back to one of your earlier questions, Jonathan, that you were asking me, one of the things you should talk about is qualifications. What does that mean?
Yeah.
A level 6 is essentially first year undergraduate degree. Level 7 for certified financial planner is master's degree level. So if you talk as a client, when you're talking to a financial planner about their qualifications, don't just let them fob you off and go, well, I'm a CFP or I'm chartered or whatever. What does that mean in terms that you are comfortable to understand?
Yeah, it's quite, and perhaps I would concede that if you are at a particular stage in your life, maybe early career, you're looking to get on the property ladder, and it's all about arranging the right mortgage. I can perhaps accept that. That a mortgage planner doesn't need to be a level 7 qualified financial planner. Perhaps somebody that's advising a company on a group pension scheme. I can see scenarios, but for to be in 2026 where it is actually possible for somebody at level 4 to point a client in the direction of a higher risk tax planning products such as a venture capital trust or an enterprise investment scheme, or that type of thing is quite
Yes.
something.
And
And I
I think,
suppose, I know the firm would have to take responsibility for
yes,
that. So
yeah.
I get that.
And then that goes back to what we were saying earlier, Jonathan, about where are the checks and balances in the firm? Are there other members of staff? Are there other areas of expertise in the firm? If you are being recommended as a client to go down those sorts of routes, do they have professional indemnity cover for that? But again, it is the responsibility of the firm to oversee and to authorize essentially the advisors that are giving that advice. But as a client, you can still ask, and I think some of the things it's quite often, I find, people get into sticky waters. Clients end up being in sticky waters, shall we say, and having to make complaints, it's normally where there are tax breaks concerned.
Yes. Yeah.
So it could be inheritance tax, complicated setting up trust, something like that. It could be, well, like you mentioned earlier, you've got clients who are about to sell their business, who are striking a deal to sell a business, or they're, like you mentioned, their dental practice. And, what do I do with that money? And surely I'm not just going to have to, pay like 60% tax on all of this money. Are there other ways that I could maybe get some of it back? And I quite commonly see, especially the number of complaints are related to that, where what we all have termed for many years the tax tail wagging the investment dog. You've got to look at it from both sides of the fence. Is the investment a sound investment? And as a client, do you understand it? Could you explain it to your family, to your mum, to your closest friend? If you couldn't explain it as the client, then maybe you shouldn't be having it, because you
No.
really do need to understand these more complicated investments. And don't be afraid as a client to say, well, are there other alternatives? What are the other alternatives? Because in my experience, in financial planning terms, there is always at least two strategies. One strategy is do nothing, you don't need to. The other strategy is make this recommendation, do this one thing. But commonly, there is always a third strategy. And so if something is very complicated to you as a client, always ask if there is a simpler, less complicated option that perhaps you could explore alongside both of them, so that you can understand what those pros and cons are. So again, you can collaborate with the financial planner to make that decision, rather than just coming in and going, kind of feeling a bit like a financial advisor. Well, you need to have this EIS, for example, because you want to save 30% tax, and therefore trot off down that route. And we won't
Yes.
worry about anything else, because maybe there are other options.
Yeah.
And even if there aren't, have those other options been explored? And the answer is no, 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 no across the board. This is
Yeah.
your only option.
Yeah.
So don't be afraid to ask for alternative options or pros and cons of any given option that you might, a recommendation that might be made to you.
Yeah, completely agree. And when you think about the human side of money and wealth, Jackie, from your perspective, after a lifetime in planning, what have clients taught you about money and life? And maybe aligned with that is, have your views about wealth changed over the years?
Yeah, so my clients and financial planners have taught me so much about money. My views have changed enormously over the years. Back in the day when I first started in the financial planning profession back in the 90s, I was very conservative. I didn't really like the stock market, mostly because I didn't really understand it. And I didn't understand that. I always thought when I was given advice that that was the only solution. And there wasn't. There's always more, as I just mentioned, there's always more than one potential solution or strategy. And my clients used to challenge me, and they would say that sometimes, and they would be like, Jackie, so what else have you considered? And I'd be like, actually, I haven't really considered that much. And I'd be like, I'll be back in 5 minutes. But so it kind of forced me to open my horizons. And also, my clients have been so kind and supportive that we've built such close relationships with them that over the years, I've met their families, their other halves, their children. They've taken risks and things where they fully understood things that perhaps they otherwise wouldn't have done. And so they've taught me that you can take risks. You can take risks with your money, and it's okay to do that as long as you understand that balance. So, for example, there was a firm I used to give advice to, three guys who were partners in a firm. They hired heavy plant machinery, and they took a massive financial risk, because obviously you need a huge amount of machinery to be able to, and then trucks to deliver it all over the country to hire it out to people, and then it would get damaged and all the rest of it. And so huge amounts of money were going into this business, and they all three of them had very young families. So they would say to me, Jackie, we're all of us really cautious about our investments for our own personal wealth and future. And you can understand that, because they would say, we're taking colossal risks, or off the scale risks, with the money in our business. And so we need to counterbalance that somehow. And so that's why they were kind of overly cautious in their personal financial planning. But having that conversation with them, I was like, well, yes, but this business isn't going to last forever. And then actually it's still in existence 35 years later. But at some stage you will want an exit, and then you're going to have to rely on whatever's left. And then they would be kind of like, oh, well, I see what you mean. And so I've also learned that you can separate out different parts of your life, your working life, from your personal life. And whilst one does colour and influence the other, you can be braver in other aspects, like these guys did, in order to protect your future personal life when you exit businesses or practices. But it really is collaborating that I've learned to be able to say, okay, actually, I don't understand, because some of the time they knew more than me about certain aspects, and you quite often find that about their own, if you're running a business or you're employed in a specialist role, you know a huge amount about that aspect of the working world. And it's okay to say that actually you don't understand about some of the other aspects. You can still be, a massive boffin and know everything there is to know in one area, and actually admit that it's okay that you don't know everything about, investments or EISs or anything like that.
Yeah. I know certainly. I would say when I reflect on what was it, 2004, when I decided to go into financial planning, so a little over 20 years, I would say that I think what clients have taught me about money in life is that what really matters is contentment. Being less anxious about tomorrow. And I mean contentment, whether you have a lot or less, is finding contentment, I think, is really massively important, and maybe more important than anything. With wealth, I've got a strap line behind me which has been there for years, that real wealth is about much more than money and possessions. I think if I was to develop that, I would say that my views when it comes to wealth is that actually it's what really matters is that the wealth that you have, or whatever you have, allows you to live a fulfilled and meaningful life. I think, and that'll be different, obviously different for different people.
Yeah.
And I suppose I'm keen to ask you, and this is probably a really pivotal question, given that you're at this point of stepping into retirement, Jackie, and a lot of our clients that I think the majority of clients or new clients, perhaps past clients, that have come to us when they're sort of near retirement, probably within 10 years of retirement. Not always. What advice would you give someone approaching retirement today?
So retirement, you define what retirement looks like for you. Don't let anybody else define what retirement looks like for you, because retirement could mean financial independence and still working a day or two a week. It could mean looking after the grandkids a day a week. It can mean a whole range of different things, maybe starting a new hobby. But think about what it means to you when essentially you stop doing what you've been doing, earning a living for all of these years. But don't rush into it. What I'm finding is that I kind of feel the urge that I should be filling my time with stuff.
Yeah.
And even for me, that, you know, I've been thinking about it on and off for the last 2 years. I still, when it actually happens, that's a whole different ball game than actually thinking about it and planning about it. For me, it's not about the money. In a lot of financial planners and financial advisors, particularly, they talk about the money. Am I going to be okay? Do I have enough? All the rest of it. But actually, when you get there, it's not actually about the money. It's like what you were saying, Jonathan. I know that I'm okay. So am I content? Am I happy
Yeah.
with being retired? So I'm not a retired librarian, a retired financial planner. I'm just retired. And what does that look like for you? And you don't have to rush through and think, right, I need to fill 8 hours a day with this, that, and the other. What am I going to do? Right, I'm going to take up photography. I'm going to take up painting. Maybe I'll start playing the guitar. All of those kinds of things. Just let particularly, I think, the first kind of 12 to 18 months, give yourself some grace to wind down physically and emotionally. I think that's a massive thing. I think I saw some statistics the other day that, we can cause quite a lot of health problems if we kind of charge up to the retirement line and then we go doink and we stop. So let yourself breathe and wind down into retirement. You don't have to have the whole thing sorted out right from the get-go of ding the day that you clock out of your job, and think about what actually retirement means to you. What do you want to do, rather than and I think this falls into, many women will feel this, what am I supposed to be doing for somebody else? I've got a bit more free time, what should I be doing for somebody else? Press the pause button on that and think about what it means for you. What you need to be doing more of is that looking after yourself a little bit better. Is it going for an extra long walk a week? Is it going to the gym a little bit more frequently? And start off with those small steps to ease yourself in, because you will meet other people along the way, because you're out at different times of the day. You will get, you'll make other friendships and other relationships as you go, but you don't have to have everything sorted right
No.
from day one.
Yeah. But giving, presumably, but absolutely right. But importantly, give some thought to your retirement in terms of how you're going to spend time. And I think, one of the
Yes.
hard things, I mean, I often think about in terms of myself is that my identity in so many ways is essentially wrapped up in this. Yes, I'm a
Yes.
husband and a dad, and um, I'm a member at church, and I serve at a local church, and I play golf. These are big parts of my life. But I'm so involved in this business, and in the financial planning profession, that I often wonder, goodness, if that's taken away from me,
Yes.
you look at what's left, and okay, I suppose you've got more time to allocate to these other things, but it's not something anyone should take lightly.
No. No.
Certainly,
And
and there's plenty. There's stories of people who that. During their working life, they loved a round of golf, 2-3 rounds of golf during the week, and they couldn't wait to retire, and because they could potentially play more golf, and yet when they retired, the golf didn't feel the same, because the golf before represented a release for them from their
yes.
from their work and the stress of business and so forth, and then all of a sudden it's take it or
Yes.
leave it.
Yes.
So
Your
yeah,
focus changes. Your focus absolutely
definitely.
changes. And I think, you've hit the nail on the head there. For so many of us, our work is a huge part of our identity.
It is, yeah.
And that's why it's taken me kind of 2 years to get my head around the fact that, should I okay, maybe I should go part-time. Maybe I should, or should I just knock it all on the head and walk away? And you have to grapple personally with how you feel about that, because if you go part-time, then that might mean that you don't have the same autonomy where you're working, that
Yeah.
maybe they bring a boss in over your head, that then you're kind of middle manager or whatever because of your your reduced hours. So there might be natural consequences that might annoy the hell out of you. I think after being my own boss for 5 years, I think if somebody did that to me, I'd be out the door like a rat up a drain pipe, because I don't think I could do that now. But there are other, again, unintended consequences that can happen, and so you kind of have to go, okay, well, maybe I just have to kind of sit with it a little bit. Don't rush into those decisions. If you know you're working with a financial planner and your finances are okay, and they don't have to be, like you said, they don't have to be stellar. They don't have to be, right, well, I'm going on a cruise around the Caribbean or whatever next week, or whatever it might be. You're not looking at saying, okay, I've got millions of pounds. I mean, it might be, and that's all well and good. But if you don't have that kind of money, it's like, well, what do you want your money to do for you? How is it going to support the life that you want to lead? And a friend of mine who is a psychologist actually in Canada, Moira Summers, who I know that you know, Jonathan, a very lovely and kind lady. She works with a lot of clients and financial planners where the clients have had, most of them have had brain injuries, and their personality has changed. And so she's helped kind of smooth that gap between what they used to say and what they might say now to their financial planner with after suffering their injury. And she always tells this story about, imagine that you've retired and it is a rainy Tuesday afternoon. What are you doing? And most people kind of look at me and pull a face, and you kind of go, what you talking about? And what normally happens is that on a Monday or a Friday, we're doing the shopping. We might be looking after the grandkids on a Wednesday or a Thursday, or doing a little bit of golf, like you say, or hobbies. But normally on a Tuesday, particularly a Tuesday afternoon, statistically, we're not doing anything. And if it's raining, we can't go outside. So what are we doing? And that kind of helps. Those kind of questions help crystallize you to think about and visualize what retirement might actually look like. And like I just mentioned, it doesn't have to be the end. It isn't going to look like that forever. But what does it look like immediately after you retire? What might it look like as those months roll by, say at the end of the first year after you've retired? What would you want it to look like? As in, what would you want to feel like? Like looking after yourself a little bit more, walking the dog a little bit more. For me, open water swimming and cold water a little bit more, all of those kinds of
Yeah.
things.
Yeah.
But what does, like you say, contentment, what does it look like for you? Not for
Yeah.
anybody else, not for I can do more work for my son or my family or whatever it is. Don't get sucked in from one job into another job. Retirement is not an occupation. It's
It's
time for you
interesting.
to do.
Sorry to jump in, but I heard it recently that actually, rather than thinking about, what do you want to do in retirement, actually a good question, a better question to ask yourself or ask somebody is, what would a bad retirement look like for you? And
Yes.
it's sometimes a lot easier to answer that. And
Yes.
that and depending how you answer that is probably is your answer to what a good retirement would look like. Jackie,
Yes.
I'm conscious. I could probably speak to you for hours about this, and I'm sure there's you could do another podcast episode around one theme, whether it be retirement or investing or anything, for that matter, tax planning. But I suppose in terms of wrapping things up, my final question to you would probably be that if you could give one piece of financial wisdom to anyone watching or listening to this episode, what would it be?
Good question. Financial wisdom. So I think I would think about what matters most to you, that you can then make your money work for you towards that goal. And I think that's a lot of us are kind of dragged along, driven by investment returns going up, down. That's all a distraction. It's about how it helps you do what you want to do to get where you want to be. So think of it from a selfish point of view, if you want to think of it that way. Your money is there it's like the engine of the car, but you pick the destination, you program the sat nav, you get to decide.
Great. Listen, thank you so much, Jackie. It's been such a thoughtful and insightful conversation. I think what really stands out is that financial planning isn't just about numbers, it's about behavior, decisions, and ultimately helping people, live better lives, to help them live the life that's important to them. And from how the profession has evolved to what truly great advice looks like, to the patterns you've seen play out over decades, there's so much here for us all to really reflect on. So thank you, not just for joining me today, but for the contribution that you've made to this wonderful profession over your career. And for any of our viewers or listeners, if this conversation has prompted you to think differently about your own financial future, then it's done exactly what great planning is meant to do. Thank you again for listening and watching the Purpose for Wealth podcast, which is brought to you by Wells Gibson. And hopefully we'll see you again soon. Thank you.